There is that old saying, sell in May and go away, because stocks over decades have tended to underperform in the summer. However, our guest says it doesn't ring true right now. She says volatility persists in the market, and that is creating buying opportunities, and she thinks investors should stay diversified and be ready to act. Let's get more from Brianne Gardner, Senior Wealth Manager with Velocity Investment Partners at Raymond James. Brianne, thank you very much indeed for joining us. I suppose we are in a very unusual environment with pronouncements from the White House making stocks move, at least in the short term.
Yeah, thanks for having me, as always, Andy. Yeah, I mean, it's definitely, there's a lot of news that's coming in and out. And I think, we're not seeing as much swings in the markets as we did maybe through April, where the market was swinging, more like 3 to 5% a day. I think it is a little bit more muted, but we have still seen quite a big rally off the bottom. And to us, that is historically bullish. I mean, the S&P has been up over 18% in the past 7 weeks. And really, that has occurred in only 35 trading days. So, for us, there is momentum behind the market. We do expect some volatility in the short term, but even if we're looking at earnings for companies that have already reported, they are up 13% year over year. So that is quite impressive. We've seen about 80% of companies have beaten earnings expectations, and most companies have been expanding their margins. So even despite some of the anxiety around the tariffs and, economic data coming out showing slowing and consumer weakness that could weigh on them, we are still getting strong data. So I do think it is important too to recognize, the difference between the economy and the stock market, and remind investors that the stock market is forward looking. So we can see some slowing signs in the economy, but the market can continue to go higher. So even after the strong month we saw, S&P gained over 6% for May. NASDAQ jumped about 9.6%, and TSX as well posted over 5% gains for the month. That's the best monthly run we've seen since November 2023. And now we are starting to see again the Mag 7 that had extreme sell-offs back to leading the gains, up over 26% from their lows. So I do see, optimism around some potential tariff relief, lifted sentiment, even with President Trump, doubling down on the steel tariff hikes. Again, I think we are watching the economic data carefully to see which companies will be impacted. But for us, we are still bullish over the long run. Stay cautious, I think, going forward, but we still see more legs left in this bull market.
The banks, generally pretty decent earnings, but there were some disappointments, but rising provisions for credit losses, the Canadian banks.
Yeah, I think we were watching the banks closely, and they have had a huge run up off the low as well, which is good for them. And I think same thing, Bank of Canada, we're going to continue to see interest rates come down, which should be favorable for the banks. We saw Canada's big 6 banks had a little bit of mixed second quarter. 4 beat expectations. That's supported really by strong capital markets, right? So even though we saw the loan loss provision changes, we still saw strong capital markets results there, and rising dividends, which is favorable for investors. So we did see 2 of them miss. They were set aside, as you mentioned, a little bit more for those loan loss, but still a clear signs of a little bit of caution creeping in, but so we have actually been taking some profits on our Canadian banks as we saw that huge run up there. We still think there's upside again in the financials, but we would be a little bit cautious to be adding right at these levels.
You have some stock ideas for us. AbbVie, the healthcare player, what attracts you there, Brianne?
Yeah, we've seen a big sell-off in the healthcare sector, and I think just looking even at a valuation perspective, the healthcare is looking pretty attractive right now for us. AbbVie, has had strong new medicines that they keep launching and are taking the place of older drugs, some that are, more losing their patent protection and helping keep their growth story on track. So we see AbbVie trading at kind of fair price compared to other healthcare companies. but still offers, a healthy dividend. So for us, it is a good option for that steady growth, steady income. More retirees too, looking for that consistency. And then I think, we have a target on the street. RJ has about 227 USD, was trading around that 186. So still about 22% upside potential from here. So healthcare, again, is a sector that I think we will see some run up on the second half of the year.
Microsoft, the favorite tech name for many investors because they have such a grip on global business, for example.
Yeah, exactly. And I think, Andy, just touching on that too, they still are, and I mean, consistently have been, right, a leader in that cloud space and making progress, extreme progress on the AI with their Azure and generating AI tools, trying to help provide long-term growth catalysts. So we see that as a bullish for Microsoft too, especially in the Mag 7. They have had, consistent double-digit revenue growth and strong cash flow support, both innovation and shareholder return. Again, we see consensus target around that $510 US price per share. So still about 11% upside from here.
And then finally, Barrick Gold would be among your favorite names in bullion mining.
Yeah, I know you mentioned, everyone's watching gold closely. I think we still expect to see weaker US dollar. So for us, that is a bullish reason to still be in gold. I think, still the flee for safety. There's still a lot of economic uncertainty, and I don't think that's going away anytime soon. So Barrick Gold is a great space in the materials sector. I mean, even if you look at the TSX alone, how much gold or materials has been impacting, about 50% of the growth we've seen out of the TSX, and we think Barrick Gold is one of the world's, it is one of the world's largest gold producers and mining operators. So, we see it in a safe country, which has helped reduce its risk. And I think gold prices are up around 25% this year. I think Barrick has a strong positioning in the market that does mean it can benefit directly from higher prices. So we see still we have a price target about 36.50 per share CAD. And for, us, I think we're still seeing about 39% upside from here.
And of course, I'm out of date. Barrick Mining is the name now. I forgot about that because they're so keen on copper these days. Brianne, thank you very much indeed for joining us.
Thanks for having me, as always.
Brianne Gardner, Senior Wealth Manager at Velocity Investment Partners at Raymond James.